Nah. Oh yes. Oh yes. Can you hear me? Let me share this with everybody. We are live. 2 minutes, people. 2 minutes. What is happening? What is happening? What is happening? Let me just see that everybody is on board. We are. Discord has the link. Instagram has the link. You are here. Where else can we send the link? Let's send the link to my neighbors. Tell me where you are from. How long have you been trading? And are you ready for this awesome session? Please tell me also if I have any connection problems. All right. Let's get it popping. Let's get it going. Into the charts. Into the charts. Gold analysis, market analysis, price action. What you came for, you will get. So let's go. Let's see. What we have here. I might have some connections in along the way, but um, it should be no problem. Okay, let's begin. Let's begin with a wide and clean chart of gold. This is not clean. Hold on. I have a lot going on. I have a lot going on in these charts. This might... Nope. Alright, I can take this away. I think I can take this away. Let's see. This is the daily. Yeah, I can take this away. Okay. Let's erase this and let's start with this daily time frame. Can you hear me? Hello, hello. I think I lost connection. Before I go on, please let me know if you can hear me. I think I lost connection, but we should be ready. Okay. All right, let's go. Let's go. Daily time frame. This is gold, and we are looking at what I think is a big compression. Okay, a compressed correction right here. We have a potential. I don't know how this trend line is going to be, but I think we have a compression correction. Okay, I'm going to show you in a second what I'm referring to. Let me use the chat, by the way, if you have any questions, please. Where's the chat? Where are you, chat? Alright, I think I can see you anyway here. Okay, so this is where I think price is going to respect. And I've been sharing a lot of analysis in my Discord that we might get a bounce at the 61 retracement of the Fibonacci. So let me edit this for you. It's not loading. Thank you. I'm gonna take that away, take that away, take the 50%. I'll leave the 50%. Okay, and what I'm basically measuring is this low to this high. I want to know the retracement of Fibonacci. As you know, this is the golden ratio and it matches. This is what I like about the market, that it is perfect. Price action is perfect. Mathematics is the language of the universe. And as you can see, we had a very important resistance right here in the past. Okay. A very strong support here and here. And the bodies of all of these candles also respected this range. Okay. So this is an overall area where we could potentially have a very strong bounce. Okay, this is where I think we might be able to catch one of two things: either the pullback of this bearish market initiation, which might have started here with this big dump when the war started, because remember, this was just a manipulation. This was an institutional manipulation. Gold, what is it, JP Morgan and I forget which other banks got caught manipulating the price of silver and gold. So they dumped on all their retail clients who were buying gold here successfully. They just took all this money. So this big liquidation, I don't think it was anything to do with the war, because this was January. The war didn't start till March. And so this, I'm going to ignore this. This could have been two things. Apart from the manipulation, they had insider information that the war would start this year, and they decided to liquidate and basically manipulate. Regardless of how, when, why, the war started right here. And this is a classic buy the rumor, sell the news. This is sell the news. And historically, as you know, when war starts, panic kicks in, stock market gets hurt, people might need cash fast, and the dollar initially, that's why the dollar picks up strength. And as you know, if the dollar is picking up strength, gold is not. So that's why gold started dumping. Now the war has already been going on, and there wasn't any more dumping like this. You see, all was happening, it was just this up and down, uncomfortable here, up and down. This is the overall sort of, okay, what's going to happen situation and market structure. So let's go back in time. Inflation, unemployment, rates, a bunch of things with the dollar being losing faith, the people losing faith in the dollar, the economy and global financial system in a reset. So gold is screaming all these changes. Here you have a manipulation, institution manipulation, dumping. Here you have the war, dumping. But either way, there's no more, how do I say this? There's no more engagement. Price is not taking off or is not dumping anymore. So what that tells me, I think, is it's simply loading. Okay, it's loading. What's it loading? Honestly, I think it's loading a continuation of the overall trend. Okay, the trend is your friend. And I rather look to buy gold than to sell it thinking it's going to come down. History is going to repeat itself. 1970 something, Iran war, gold crashed 50 or 30%. Will history repeat itself? Those are just questions. Price is telling me something else. Like price action is telling me this is a very sensible pivot zone, major pivot zone, where we had resistance, support over here, potential support, simply because price is above this pivot zone. Okay, until I'm not, until I don't see price below 4,300 and even 4,000, even 4,100 where price respected. I'm not thinking this is going to dump to a lower low than this. Could that be the case? Yes. I'll do the bears a favor and I'll share what a bearish scenario could look like before I continue with my analysis. And even more, before I go on with anything, like, subscribe if you're here and liking this. Liku is the future of market data analysis. I am launching this. These up here are the benefits for the waitlist. Go on my YouTube. What's it called? I'll actually leave the link of that in the description of this video after, but go to my social media, join the waitlist to this project because I'm going to give some benefits. Cash giveaway. I'm going to sponsor someone for the World Cup Trading Championship, and I'm going to take someone to Miami. Okay, so that being said, let's move on. And the bearish scenario of this potential, what could look like another drop would obviously take price at least to 4,300, then 4,100, and to this support over here, which is 4,000. Okay, that's what I would initially put price in a bearish scenario. Okay, if we extend this trend line, yes, of course, it could dump eventually at some point if this doesn't hold. You obviously will have some sort of reaction because it's a very strong psychological price level of 4,000. It might get back to this pivot zone or not and might dump once more. Obviously, what a lot of people are talking about, potentially coming back down to this initial area over here that never got tested. You see the 3,500 price range, 3,400 to 3,500, it never got tested. So that is a possibility. Now, the reason I don't really buy that is because I'll tell you in a second. Okay, so this is a potential scenario. Yes. Is it my favorite and what I consider to be the most probable? No. Why? Because this is where you have to align fundamentals and market data, institutional market data, and you have to try and see and follow the money. Where is the money going? How is the money flowing in and out of the market? Okay, and to do that, I'll start with fundamentals. So fundamentally speaking, right, gold has to respond positively to conflict because it tends to be a safe haven asset. So why is this war different? Well, because what's at stake is oil, and oil is priced in dollars. And so if the price of oil goes up, that means countries and nations that negotiate with oil, meaning the whole world, they must pay more dollars. And so the price of they're also earning more dollars if they're selling it. So that pulls the price of the dollar up as well. Also, in addition to that, the dollar remains, as you can clearly see in the market, it remains the global, it's the petrodollar. It remains the global fiat, also as safe haven because it's the international fiat currency in which people and nations trade with and purchase goods and services. So when the market is in panic mode and they have their portfolios that's at risk, their stock losing their wherever they have their money, even their own businesses, what they do is they get dollars. They sell stuff to get physical cash. This is because the war is like, oh, I don't know what's gonna happen. I'm gonna probably need to bury myself in a bunker and buy a bunch of water, bullets, and milk or something like that. And so they get cash, they save cash, and they're ready to make these moves in a very pessimistic scenario. So short-term effect of a major war is sell everything, get cash, feel safe, correct? The reason I started saying to you that I don't think that's happening anymore is because that was this. That was all of this. In my opinion, probably I'm wrong. Maybe this would take longer depending on the war also. We have to wait and see. Remember that there's ongoing talks. Supposedly they're going to be negotiating. I don't think it's going to happen. I think it's going to be a very long war. However, it doesn't mean that the fundamentals behind gold and following the money changes just because the war might be long. Actually, what I think is going to happen is people are going to catch up. Investors are going to catch up. They're going to catch up to what's happening, and the history is going to continue, and the facts are going to continue to hit the markets, which is that the dollar is losing its almost all its value. The U.S. is in so much debt they're trying to reset the whole system, creating chaos. They want to tokenize everything. They want to probably this is my sort of um it's not a prediction. It's almost like I think any smart person would do this, but I think they're gonna go back to the gold standard somehow with a digital asset, whether it's Bitcoin or some new form of dollar, digital dollar. But they'll do this in order to save the dollar and potentially erase some of the debt that the US has. And this was also mentioned from this theory that if they want to inflate crypto to sell and then erase that debt because it was turned from dollar to crypto, you sell it and then it's gone, sort of, right? And then you buy it again. It's wild. I'm not gonna get into that rabbit hole, but it's on the table. It's possible. But anyway, that being said, I want to follow the money. How do we do that? This is the CFTC government website. And what I'm going to do is I want to see the commitment of traders. That is a very basic but quite potential or powerful website that you guys should be looking at. But it's kind of ugly. It looks like this, and it's quite hard to understand. And so that's why I'm coming up with Liku, and I'd want you to join the waitlist because I'm going to give some benefits if you sign up. All you got to do is sign up. So go to liku.app, fill out the form to be an early member, because what I'm going to do with this platform is I'm going to integrate a thing and or two here and there with AI, and I'm going to help you interpret this data and just use it more effectively. Okay, so just sign up. It takes 1 minute, and then you have a chance to win some cash because I'm gonna share with my partner and you guys the money from launch day. Anything we make, 10% for 3 winners. We're gonna take somebody to Miami, and we're gonna sponsor a trader for the World Championship Trading Cup. So that being said, let's keep going. Market data is key. And what is the money telling you? Let's go here to metals and others in the CFTC website. And here what I'm going to look at is how are banks, specifically institutions and big players, positioning themselves in the market. I'm going to look at what is called the futures contracts, longs and short, and options. So I'm going to scroll down in this ugly looking website, which very soon you will have in a very, very beautiful manner. And what I'm looking at is, as you can see here, managed money, long versus short, other reportables, non-reportables, long versus short. You see that? This is telling me that managed money are 122,000 long contracts, future contracts, versus only 29,000 short contracts. That is quite a big difference between long and short. So what this tells me is these guys want to buy gold. They're long gold. They want price to go up. Look at this, other reportables, 80,000, 88,000 versus 21,000. You see this? So with that, that is the basics. That's the tip of the iceberg with what you're going to do with market data. But you have to align these things. And so, does the money make sense? Another thing you can do is you go to this website called Whale Wisdom, and here you can start looking at, for example, how the hedge funds are buying stocks and what industries are they getting into. That's a bit more, it takes more time to do this if you navigate these websites. Again, I'm going to put everything in Liku so you can just see it all, and then you don't waste time going to 20 different websites. The money is long, or at least those are the numbers. We are in a very rigged game. I must warn you, everybody I think at this point knows that it could be very easy to just simply manipulate even the media, which that's another, I'm not even going to get there, but these numbers, to what degree are they true or false, right? Again, all you got to do is backtest it and see how history has shown, and if so, if the market reflects the truth, right? I personally have used this for years, and the commitment of traders is something that every advanced and professional investor, not advanced, but just, these are essential tools. And so these numbers tend to be accurate, okay? So the money is long, and that being said, price action is still bullish. I'm going to follow the money and stay with the trend. And so I'm interested to buy here at 4,400, at lowest 4,300. Okay? So I'm going to start placing these lines here, 4,300 and 4,400. 399. And this could take you at least to this previous resistance, previous support here. I also marked this because this is going to be a pivot zone. Okay? This is going to be a pivot area where I think you'll have a couple of things happening. So let's start. I think price might open it could open bullish to manipulate these previous highs, but I think after doing its thing, it'll want to dip into here, and this is where I want to see the V shape. Right around here. A strong displacement, a retest, a failure to get lower, and then a big pop to the upside, and this is where I think we'll have a bit of an accumulation phase. I think there's going to be a little pause around here, and it's going to start trapping sellers who think that it's just going to be a pullback, right? Who probably have this trend line here, and possibly ones who have this trend line over here, right? And so they're going to be selling all of this zone. All of this, they're going to start selling, because this is where a bunch of trend lines are going to get connected, and they're going to show resistance. And obviously the resistance itself, okay? So this is what I think is going to happen. It's just going to play with them. Okay, these lines are going to fail. And what I think is going to happen is you'll just have this sort of loading, what I call funnel. And then price will really break this pivot zone, and all the resistance is going to be creating here, because as the market dips, that's supposed to happen because it's engineered liquidity. It's supposed to have those dips, because those are either small entries happening or institutions and banks manipulating, selling, creating the illusion it's going to start falling, trapping, inviting sellers to sell, and they're going to place their stop loss from this zone all the way up to this resistance, and it's going to start creating an ocean, a sea of liquidity, all of this, right? Whenever price, because they're going to start saying also this is a lower low, and it's going to make a lower high, and then a lower low is going to come. Don't forget, I showed you the potential bearish scenario, so we must adapt if it's the case. I repeat, I don't think it's going to happen, so I'm focusing on my personal idea and prediction. If you see it, if you start seeing this, just follow it. I'm leaving you a blueprint of what you might see. So back to the liquidity, and back to how price would start inviting these sellers. They're going to place their stop loss all the way up here, and price, when it grabs liquidity, it goes very aggressively, and so it's going to pop and get to this resistance, and above this resistance, just barely above it, then it's going to dump once more. That is where there's going to be probably quite a big dump, because then that would be the breakout of the trend line. There's going to be a potential retest of it, and then you also have this trend line coming from here, and so at some point it'll find a mid zone, right? It'll find the, what's the word I'm looking for, the overlapping of various zones, from previous resistance to a trend line to a Fibonacci level, whatever that is. It'll find itself there and then completely erase every seller. Okay, if this dip is big enough, because this could also fail to get below the pivot zone and stay around here. Okay, this is what could happen instead of price dipping again. I think it's gonna dip again. I'll show you why. Watch this. Okay, I want to show you these are relative equal lows. Hey yo, Omer, what's up, people? I'm looking at the chat right now. Plug effects here. This is all in the Discord. This is all for the VIP in analysis and in VIP setups. But I'm actually studying it here and going in detail. So anyway, I think we're gonna have a dip again, because from the models and from the trading strategies that I've profited a lot from and that I teach, and it's in the blueprint, and it's all over my Instagram and groups that I talk to and everything. The model is simple. You have a support where price shows evidently respecting, right? It shows that it's respecting a few times, and then you have some sort of moment, engagement here, then price comes again, and then obviously it bounces because it's support, right? This has to happen. This theory of support and resistance, that's retail. This is where everybody loses, because it's the only thing they teach, and they don't tell you that's supposed to happen, because then it's gonna get taken. Nobody tells you that. When you read those textbooks of price action, it doesn't say support exists because it builds liquidity, which is later going to be taken. If that would be the case, whoever buys a support, make sure to get out before it dumps again. But you have unexperienced traders buying, holding, and they never close, or they just wait for price to come again, and there's this thing called triple bottom. Anyway, what ends up happening is you have price come down again, and it doesn't come down strongly. What happens is price gets there slowly, and it starts bouncing up, creating that illusion that it's going to be a support again, and people start buying. And what happens with those little rallies, right? What happens with these little rallies, right? Look at what I'm doing here. Look, I'm creating this like see up and down. What happens with this up and down? It starts inducing people. The impatient start getting in, and they're targeting this resistance, and they're getting in. Where's their stop loss? It's all down here. All of this is their stop loss. And so the V shape, which is what I'm explaining here, I'm basically starting to illustrate how you can anticipate it and how you're gonna, and this is working for everybody. Anybody thinking right now is like, can you just get to the point? I am. Listen, if you're thinking like that you're probably losing money. Have patience, bear with me. This is what you're gonna wait for when price dips to this area right here. Okay? So check this out. Price is gonna start giving the illusion that it's gonna go up. What happens? You have relative equal lows right here. Yes? Right here. These are all relative equal lows. They're not equal, but they're relative equal. And what happens? Price will dip below once. And you can, guys, you can go back. Whoever's watching me for the first time, welcome, thank you, amen, blah, blah, blah. Like, subscribe, whatever. Liku. But let's refresh our memories. The V shape, you can back test it. You guys know this. There's a first push down below the equal lows. What happens then? Now this dip, hold on, this is not a very long dip. This is just a little like a you can see it's evident, but it doesn't go lower. Then you have a rally. But this rally, this does not break key resistance. It does not break a key previous high. What happens? That is the trap right there. That is the first bull trap. So this is one. You guys know. I know I'm being a little. I'm repeating this for the people that are in the VIP, but because this is a YouTube live, anybody coming across this video is gonna see it, and they need to learn what the V shape is. The V shape is a push down below equal lows. Then you have a push back above the equal lows. You will see price candles closing back above the relative equal lows. Then you have a third push below one that's going to manipulate. And let me tell you something. Within that push, there's another V shape. That's a little tip right there. It's smaller, but that it is there. So these are equal lows to the little V shape. And then what happens is you have push 4 breaking above 2 with strength. This is the one that a lot of people from the ICT movement and his teachings say, oh, fair value gap or imbalance or order block or a bunch of stuff, which is true, guys. I'm not hating on anybody. I'm just saying that some people have told me, like, oh, that's ICT, and they're like, I'm not. I'm just explaining the market as I see it, and it turns out that there are other terms to call certain things. I'm teaching you how to get in the market down over here. I don't give a hell about any other thing, but it's fine. If you want to call it like that, beautiful. I have called it like that too. There is a fair value gap. There is an imbalance. Those are terms in the market. But regardless, here's what I've seen. Those equal lows around that zone is where you will see the fair value gap, the order block, and all these things. And so, but what I'm looking at is the V-shaped structure, which is 1 down here below these lows, 2 back above these lows, 3 below 1, and a big push 4 above 2, and then the pullback to offer push 5, which will respect the range between 2 and 3 and respecting previous lows. And so you might see this. It's very likely you'll see eventually something like this. Then price start taking off big. Okay? So this is the overall you can see this in the 1 minute, 5 minute, 50 minute, any time frame, because price is fractal. And if you want to get deeper into that, I have a whole session of price fractality. If you are still with me, thank you. We're about to launch Liku. It is the future of market analysis, not just market data. It's the future of market analysis, where you bring all the fundamentals, all the institutional tools and data, AI integration, and you put it in an awesome one platform, very complete for you to understand what you're looking at, know how to use it, and actually start using it in your trading, in your investments, and much more. For this, I have a very special offer for early members who join the waitlist, which is right up here above my head. You go to liku.app and you leave your information. I'm going to give cash. I'm going to sponsor a trader, and I'm going to take a trader to Miami. So that being said, let's get back to our charts. Okay, so let's go back to the charts. Here, the actual chart, not my drawing. These are the equal lows that the market is going to manipulate very soon. And if we go down the time frame from the daily to the 4 hour, we can start seeing the picture a bit more beautiful, more pretty. Yeah, prettier. So check this out. These are the equal lows. I know I basically almost made a copy of what I drew, but it's showing you the mechanics, right? This is push 1. This is push 2. I'm going to ask a question. If that was the bottom, price shouldn't have traded downward. It had to start. It would have had to start going much higher if this was going to initiate the rebound. Okay? So the critical zone, the critical zone is this right here, because these are previous lows. These wicks, you can't ignore them. These are previous candles in the 15-minute time frame. So this area is critical. If this area holds right here, then you would say this was 1, 2, 3, 4, and you're looking at 5. I'm going to show you what I mean. Watch. What I'm trying to project is that this is push 1, 2, and we'll have 3 down here, and then 4 up over there, right? However, these are the equal lows, and this wick is also a down and up. If I go to the 1 hour, bear with me, guys. Bear with me. Check this out. You see, this dip and this move up is also 1, 2. You have 3, and look at 4. You see, so this could be the V shape from this push of this wick, this as 2, this as 3, this as 4, and all of this as 5. Okay, that is also a possibility. And the structure is there. Excuse me, the structure is there. I'm going to take the circles now. Look at it. 1, 2, 3, 4, 5. 5 is respecting the range between 2 and 3. So this could be the V shape. The thing is, because price is fractal, there is also a probability that that is 1 and 2. You see, because when price comes down and back up, it creates the V shape. And depending on the time frame, it'll make it wider, bigger, and it lasts longer. It takes longer to get formed. And that is why it's a challenge, but it's that's what I'm trying to, insert in your brain right now, how to start anticipating it and mapping it out. So this is a key area. You could start buying. yeah, you could start buying because maybe price will take off here to grab these, the liquidity above these highs, and you make some money, right? Maybe it comes up to here, but it could hold. It could hold as resistance. Okay, it could hold. That's why, and the way I see it, because it's coming down, I think it'll actually start downward when it opens on Sunday later in a few hours. But anyway, this area is key. If this area does not hold, then this is where I wanted to show you. I'm gonna zoom out. Then we see that this is 1 and this is 2, because 1 is below all of these lows over here and 2 is above them. You see that? Simple. Now you're waiting for 3 to come below 1. And what's interesting is what's below 1? The Fibonacci retracement level, the 61. So anything below 1 is a good buy, a very good buy. Okay, so now we've identified that this area, you're going to mark this, right? So now you're going to put that low, boom, right there. This is that area. Remember that orange line? The rectangle is the 61. This is the 61 right here. This line right there, 61, 70. So I'm also going to mark it right there, 61, and then the 70%. I know it's wide. That's a very wide range, but that's the range. That's what you got to do. So what are you going to do? You're going to wait for price to be in that zone. I'm going to mark this in blue. Okay, right there. And so what I want to wait for, this is the 1 hour time frame. 1 hour time frame. I want to wait to see the V shape in the 15-minute and 5-minute at or below 4,400. Okay? I want to catch the lowest point possible of the manipulation of this low. And to do that, we're going to identify the entry in the 1 minute and 5-minute time frames. Whenever that is, whenever, if it's Monday at 4 p.m., if it's Tuesday, whenever price gets to 4,400, I'm going to go down to the 1 minute and 5-minute time frames, and I want to wait and see how that area holds and responds. And essentially, what I will look for, and it's very likely that it'll be there, is a smaller V shape. Okay, right over here. You'll see a 1, maybe touching 4,400, bouncing. Then you'll probably see a 3 manipulating that 1, and then you see the 2. And usually that push is going to retest that little low, which is the retail thinking that's a previous low, future high. And then you have push 5 that is going to respect 1 or the range between 2 and 3. And then you'll see price take off. Okay, questions so far? I'm going to also show you another potential way in which price might make that low, because it's not always the V shape and it's not always so pretty looking. As a matter of fact, price could also compress, and that might look like something like this, where price comes down, then goes up, then comes down, and as it tries to go back, it fails to trade higher, but it does this. You see this? This is also a very, very interesting way in which price will start coming into a zone, loading a big move. And so not always do you see the big down dip and back up, right? You don't always see gold bounce like this or make a low. Maybe the 1 minute does, but not the 1 hour, not the 30 minute. Maybe what I'm suggesting here is that you might see also what it's called one of these Elliott wave count theory people. They like to say it's like ending diagonal or wedge, where it's making this sort of, yeah, like a downward little funnel, you see. And that is a very powerful setup. Price will eventually just fail to make previous lows, lower lows. It'll make a manipulation real quick and then take off. But even there, it's a V shape. Even there's there is a 1, 2, 3, 4, you know. But anyway, regardless of how price gets to 4,400 and below, right here, I want to see a 5-minute V shape. A common question is, would it be a 1 minute or 5 minute? Either one, but obviously 5 minute. If it looks clean in the 5 minute, it's nice. Okay. This is the 1 hour time frame, for example. Okay. Anyway, what else? Looking ahead. Looking ahead, what can we expect? After the V shape, let's say we manage to hop in the V shape and you start buying somewhere around here and you are in profit over here. Going back to the sellers getting trapped, right? Going back to the sellers getting trapped, remember this was 3 and you'll see 4 above 2. Okay, so this is what we're trying to project. What you could start doing is, let me fix this to how I think it's actually going to be. It's going to be like this. There it is. There it is. There you go. All right. That is how I think it's going to look like. If you want, take a screenshot. I think that's how it's going to look like, with like very similar proportions and angles. I think it's going to be something like that. And here's where you have the V shape down over here. 1, 2, 3, 4, 5. And then again, let's change this to purple, because this is the bigger V shape. And then this is 4 of the V shape. And then you'll see 5. And that is where the bears are going to start getting trapped. So sellers are going to come in, and this is going to come down. And I think it's going to respect this area between 4,450, because that was this previous low, and 4,500. So around here, I want to see compression. I want to see another V shape, whatever that is. I want to see price fail to trade below 4,450. This could do this. It could stay like this for a little bit, but at some point, it'll just take off very hard. And over here, also accumulate now above the pivot zone. Now it's gonna start, and it's gonna be here for a while, and that is where it's gonna start trapping even more people. Okay, so check this out. We have the V shape down here, respecting or manipulating these previous lows. Then we have push 5, respecting those previous lows, and then price above the pivot zone. So let me take this off. Remember, this was the pivot zone over here. So that's the pivot zone. Price will then be above it. It'll be above the pivot zone, accumulating, making these wild moves up and down, up, and then maybe it'll start to come down here and then back up, and then it'll just stay like this for a bit. What is around the corner? July. The monthly candle, what is it doing? It's coming down. The last, as you know, the last minutes of the 1 hour candle, there's rejection. And if price is doing a bullish 1 hour candle and it rejects, it leaves a wick right at the top. If the 1 hour candle is bearish and it's coming down, and before the last minutes it rejects, it leaves a wick at the bottom. That is the rejection that you're gonna see in the monthly candle, where prices is reaching the end of the month. It's gonna get to the 3 of manipulation of the V shape, and it's gonna reject, and the monthly candle is gonna close bearish on its way up. The next monthly candle of June opens. What is gonna happen? At some point, that candle will either try to manipulate the previous month's low, which then could be 1, 2, 3. You're on the same page as I am now, right? 1, 2, 3, and then 4, or it'll just take off. It'll make a little low, which is 5, fail to take out July's low or May's low, and then take off. So look at the time down here. This is June over here, May 28, June. This push 3 could actually take place throughout this week. And what that would look like is the monthly candle closing. This is where you have to think further and continue to predict price this way. So this is the monthly candle. You see? What you're looking at right now is this candle coming down, trying up, and eventually it'll do boop. And then the next candle opens. And the next candle, I think, is going to be very bullish. And what's going to happen is it will probably come down, either manipulate that and then take off, right? Therefore, this is my monthly candle, and this would probably be the V shape between the end of the month and the beginning of next month, because this is where, if I time it, if I also align, if I visualize it and I imagine how it would look like, if I look at the chart and I see it and you kind of visualize and you're like, it makes sense to me or not. This is where intuition is unmatchable to any robot, any algorithm, anything. This is where you bring the power of your mind and say, does that make sense? And time, look at June. Let's put June here. July, June, right here. Boom. On a Monday. Sorry, there it is. Right here. There it is. Let's put this like this. And let's put this like this. That's June, guys. Okay, this line that I'm going to mark orange. No, not orange. Blue. That is July. Sorry, June. You see? So, at some point, either June will manipulate and create the V shape, or because, watch this, if I go to the weekly chart, you will see that some weekly candles don't manipulate the previous weekly low. Look at this. Look at these weekly candles. Look at the lows of these weeks. Look at that. Do you see that? These are weekly lows. These are not being manipulated. Those wicks are respecting by the tick sometimes, and by barely cents of on the dollar and a few dollars in price, the previous week's lows. You see this? Look at this. You see that? So why would why not? Why not again? Why not now? Why? Let's say this, the current weekly that's we're gonna be in, that candle might even close bullish, because then that would leave the monthly candle rejecting more, and the next candle in the month comes down and respects that monthly candle low the same way the weekly candle, and so the next week's candle low respects that low. Is everybody following me? I'd like to know. Type Liku if you understand what I'm saying and you're following and you're visualizing it with me. Okay, so in other words, that would look something like this. This candle closed with a bit more rejection, and then this next candle that opens more on its way up, it'll fail to take this low of the monthly candle, which is exactly what we're looking at in terms of the weekly. And within the weekly time frame, the same phenomenon where you have, regardless how this coming up week closes, the next one respect that low, because that was the manipulation. You follow me? And then this repeats itself. You see? This is what could happen from week to week, or this. Did you see that? You have these candles manipulating that one, this one manipulating that one and taking off before the launch. So that way the previous example might work, which is that this week closes bearish and the next week manipulates it and closes bullish. So I'm giving you the two scenarios that you might see in the weekly time frames. Okay, and I'm going to draw that now. I'm going to draw that now, illustrate it for you, and take a picture and send it to you so you can download it, print it, and put it on your fridge and in the windshield of your car, and then in the back of it say I trade gold. Okay? So you guys know that's June. So weekly, whoops. Weekly candles. I want to see the weekly candles do this. Watch. This is going to be a week. It's going to be a bearish week. Because so far these are bearish weeks. This is how the week's looking. Right? And so I want to see something like this coming in this week. Okay? And then June, the first week of June, I want to see a candle manipulate that weekly low and close bullish like this. This is what I want to see in the weekly. And the month would basically look like a very long, obviously bearish month. And then this June candle, it's starting to be bullish. You see that? And obviously we're targeting a big move to the upside. So this is what you're gonna see in gold very soon. I'm gonna share that real quick. All right, who else is around? Who's following me? Sign up. Okay, so this is what we're gonna look at. This is where price during June will make a low and fail to trade lower and then just go up. Go up, 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 up. Because this is the overall compression for a big push that I think is going to take us straight to 5,400 at least, because you have everything catching up to the market with the inflation numbers, with jobs. Did you know Facebook just fired 8,000 people? Did you know this is where you have to follow the money, people? This is where you have to look at the fundamentals and macroeconomics. Um, a bunch of companies are just, they keep firing people because of AI. So where are all these people going now? They're not gonna, they barely have savings, by the way. They have debt. Not only do they not have savings, probably, they're choking in debt. So you have people that are not producing, that don't have money to pay their debt, that need to study something new to get a job again, or just get a shittier job that pays them less, which is the same thing as not having a job that can't pay your debt. And so what happens to society then? What do you do from a political standpoint and a monetary system standpoint? How do you handle that? And inflation on top of that. On top of that, are prices coming down? Nope. They're going higher. Gas is more expensive. Food is more expensive because oil is more expensive. So what? Gold is gonna just no gold. People will buy gold because they have to go to some sort of protective, not only protective but actual value. What's worth a piece of paper to you right now? What is a piece of paper with a face on it worth to you? It says $100 in it on it, but just because you can, well, when you realize that, holy shit, this headphone or this whatever, 2 years ago it was $30, now it's 70. That's telling you that that piece of paper that says 100 is not 100 as time goes by. So what holds the value in time? Something physical that's precious, like gold, that is scared because it's hard to get, and that you can turn it into something technological. That is value, not this digital dopamine bullshit of, oh, here's a token, it's in your phone. What the fuck happens if your phone doesn't work? What do you do then? How do you send it to whoever needs it or wants it? Have you thought of that? Oh, it's a cold wallet. Well, what about quantum computers and then the hack, a bunch of people getting hacked just with AI? Imagine what quantum computers are going to do. And not only that, don't think that Satoshi Nakamoto is such a good person and he created this for humanity and everybody's going to be free from the banks. Come on, we're not in fucking Alice in Wonderland. It's so obvious who created Bitcoin and what the plan is. They want to rip the world off. The elite, CIA, whoever you call it, whatever. I'm probably saying too much already, but not really. I'm not saying that much, but still, like, it's like you're fucking around with the with the elite, and so that's all I'll say. That's all I'm gonna say, and that's what I think it is. Enough of that, though. Gold is gonna catch up. People, with genuine, with their actual money in the market, they're gonna. Let me test these lights out because I got a light. I want to know how it looks like. Orange, red, yellow, purple. I'm gonna keep it red, green. Um, Gold is just gonna skyrocket, people. I've kept you a bit too long here. Thank you for staying. If you've been here long, until here, join Liku. It's gonna be great. I'm very happy and excited and proud to launching this for everyone that follows me, that comes across my content, that decides to join my Discord or not, or whatever. It's going to be a tool for the world, and that is the minimum you can do in this life here on earth. You got to give whatever you are good at doing. Teach it. Wherever you have a passion, stick with it, because that's gonna give you. Oh, look at this like little hat. I have a little hat. I have a hat. I have an iceberg hat. That looks funny. I'm gonna talk like this because I don't want to be. So yeah, your passion, stick with them. Never give up. Never give up. Anything you do, keep going. Trust yourself. Don't listen to anyone else. Whatever you think is, that is. If it's not, you learn and you change your mind. But don't let anybody tell you what is what to do with anything in your life. Just don't allow that. Because it's just not gonna let you be you. And I'm not calling here for any revolution or, being being wrong or bad or anything. It's being authentic. Like, be you. Don't be whatever a magazine shows to be, or an influencer, or the school system, or the work environment you're in, because your boss dresses up this way and he expects something to be like. He's in his own trapped in his own system. Everyone is trapped in like belief systems, thinking like, oh, I gotta do this, I gotta be this, and this is not success. And if I don't do this, I'm like, oh shit. Like everybody's like busy thinking how to be, depending based on who's around looking. What the fuck? Just be you. Who are you? What do you like? What are you good at? And if you're in a life circumstance where you're like, if you're like too deep into something, it's not too late to change. It's not late to quit a job. It's not late to change friends or even a loved one, even family. There's nothing wrong. What is right or wrong when you're doing something for your own good? Obviously, it would be wrong to hurt others and do something that doesn't, it not necessarily doesn't add value, but as long as you just don't touch anybody and don't, get in anybody's business, there's nothing wrong with whatever you do. So, if you have been thinking on making a change, this is your ultimate message right here. Some guy with a iceberg hat is telling you. Anyway, that's it for the session. I hope I hope this I hope this shows you just a simple way of how to anticipate price. No fancy methods of indicators, just candlesticks, logic, price action, the trend, um, and let's see what happens. Let's see what happens. Okay? Take care.